Hello, it's Robert Miner with Dynamic Traders Group with their DT Trade Strategies for the week beginning February 15th. In this video, it's a relatively brief video where we just look at one or two markets with potential trade setups in the upcoming week. What you learn from these videos, you can apply to other markets and other time frames. So just so you can have a little bit of confidence that what we're teaching you has practical value. These are a couple trading contests in the past couple of years. I've been involved in them for a number of years, placed in the top 3, 4, 5, almost every year that I'm involved in it. Here was last year Global Derivatives Contest. Finished the year of this contest anyway with 134.4% gain. How was your year that year? This is, by the way, real money, real trading. It's not pretend trading or paper trading or any of that nonsense. It's the real deal. So again, what I teach you has practical applications for any market and every time frame. Here's right up to date in this Forex contest for this year. In just the first 5 weeks, I'm up 57.6%, and I'm actually number one in this contest. Of course, it has the whole year to go. We're just getting started, but not too shabby. How's your Forex trading been in the last 4 or 5 weeks? Are you up more than 50%? Well, I'm not guaranteeing that kind of return every 4 or 5 weeks we're going to have, but it just shows that what I'm teaching you, I apply to my own trading day in and day out, different markets, different time frames. So listen and learn and apply. Okay, let's get started. We're going to take a look at bonds and notes this week, and even if you don't trade futures or options or the ETFs for bonds or notes, you're going to learn how to apply some of this time, price, pattern, multiple time frame techniques to whatever market that you trade. And by the way, if you trade gold, silver, the GDX, take a look at last week's video, because this coming week we're probably going to fulfill the setup for gold, silver, and the GDX, probably around Wednesday or Thursday of this coming week. So I gave you the whole trade strategy in last week's video for the potential trade setup and the proper conditions that have to be met for that trade. Okay, let's take a look at bonds. This is Bonds Weekly. When I trade, I prefer to trade notes. It's just higher volume for whatever reason. But I'm going to show you bonds. They all turn about the same. They're always in about the same position. We're going to take a look at bonds because they're in a more ideal pattern position. So we can, even if we want to trade notes, we can key off bonds in the bond reversal. So here's bonds, the weekly data right up through the end of last week. And for Elliott Wave terms, those of you who are interested in Elliott Wave, which I think is just a really ideal addition to your trade strategies, it's really important in dynamic trading trade strategies, at least, is understanding the trend position and potential reversal position, frequently based on Elliott Wave. Well, anyway, coming into last week, we were probably are in what we call a wave 5 of 5 low, and that's pretty significant. It means that the bear trend from the August high is about to end, more than likely. We're in that final section of that trend. When I mean it's about to end, I don't mean that we're going to necessarily reverse into a bull market to new highs. In fact, just the opposite. We're probably about to make a reversal and a corrective advance, a correction against the higher, much higher time frame bear trend. So we have our weekly momentums have been for 3 weeks dual look back oversold. They usually make a price reversal within the 4th week of being a dual look back oversold. So we're getting real near a potential weekly low. As of the end of the week, we had reached the ideal specific target zone to end a wave 5 of 5. So we're at price relationships, we're at dual look-back momentum relationships, and then next week is 2 really key weekly time factors that typically will result in a reversal if a market is trending into them, and that's of course exactly what it's doing. One of those is just the simple alternate time projection, where we measure the time down from this last decline, and then we measure it again down from where we reversed the trend on this last weekly high back here in, when was that? That would have been early January. So that's the 100% alternate time projection. We do time targets very similar to how we do price targets and use a lot of the same ratios, by the way, particularly the measured move. Also next week is a very important time factor on the weekly data, and that's the high to low. And that's typically the maximum time before we get a reversal. So it's always good to know the probable minimum times for a trend and the probable maximum time, because if we're coming into that maximum time, which now is next week on the weekly data, and we're coming into the end of wave 5 target zone, and the weekly momentums are dual look back oversold, and also this chart geometry on these parallel lines. We've come right down to the support end of this parallel channel. Boy, everything is coming together for a probable weekly low in bonds and in notes. So that means probably a pretty good setup for a long trade. So here's the daily data up through last Friday. And last Friday made an 8 daily momentum bear reversal. That's usually followed by at least 2 to 3 days of sideways to down before we complete what we call a daily low, and we reach the point to where we're going to make a bullish reversal. In other words, another half of the cycle, a momentum cycle, which frequently coincides with the price cycle. So what we're looking at, and what we're looking at for a trigger on the long side, is next week when we make the next daily momentum bull reversal. Ideally, price reaches around 165.18 to 164.29. That's the ideal end of wave 5 of 5 target zone. So it's a really significant price level down in that area. So at least we want it, ideally anyway, it reaches at least 127% external retracement. So this zone begins at 165.18. But then again, within 3 or 4 days, we're almost certainly going to have a bull reversal. So then we'll have 2 time frames. We'll have a bullish reversal in the daily momentum, right when we're already oversold in the weekly momentum, and we're looking for a weekly bull reversal in the momentum cycles, right at significant price relationship, end of wave target, right at significant time target, with 2 significant time factors next week, and right at the potential to complete the pattern. So we're always looking at time, price, pattern, and momentum, and always looking at it in at least 2 time frames for those setups to identify reversals and trend continuations. So that's what we're looking at next week. I think you're going to find a really good trade setup. The idea is that we trade, we don't forecast. We look to identify conditions with a high probability outcome and then minimal capital exposure. We may be incorrect about this reversal. Now, all the technical factors are there. A lot of times the market will blow right through them, but we may be incorrect about that. But the point is, when we make that reversal, we'll be able to enter a trade, whether it's futures or it could be options, even ETFs. We can use ETFs unleveraged for a great trade opportunity, but we're in that position to make the trade with very limited, well-defined capital exposure. That's what trading is all about. That's it for today. I hope all of you have a fantastic week this coming week. Remember, you get out in public, wear your mask, keep your distance, get those vaccination shots as soon as they're available to you so you can help take care of your friends, your family, your neighbors, and your community. I'll be back with you again with another video, educational video, and potential setup, trade setup next Saturday. Take care.